Let's have a quick conversation about Equifax Business Credit Report. So if you are in business, you basically know that you will have to pay attention to your Experian credit report, your Experian Business Credit Report, to your Dun & Bradstreet Business Credit Report, and to your Equifax Business Credit Report. So in today's conversation, we want to focus on the Equifax Business Credit Report. So here are the general considerations you need to really think about. So it's important to really understand that when you talk about the Equifax Business Credit Report, this is totally different from your Equifax Personal Credit Report, okay? It is actually possible to have a good personal credit score and a bad business credit score, or vice versa. So in order to find out your business credit score, you need to actually pay a credit bureau to produce a business credit report. So you gotta have to pay either Dun & Bradstreet, Experian, or Equifax. So when you think about a business credit report, what is it really? It is just a profile of your business's trustworthiness as it pertains to lenders. And but the report actually highlights your ability to actually pay your debts. And so the business credit score that you have is actually the score goes from 1 to 100. And the thing is that the more the better anyway. And so when a credit bureau produces a credit report on your business, they consider an array of factors, including your business's payment history, for instance. They will look at your credit utilization ratio, your CUR, your length of credit history, as well as company information. This is why it's so important to actually set up your Google My Business profile, your GMB profile, okay? It doesn't have a direct impact on your credit score, but it does help a little bit. And so what you want to do is that the upshot when it comes to a business credit report is that the better your business credit score, the more likely you'll be able to secure financial opportunities for your business, such as acquiring a business loan, or securing a business line of credit on favorable terms. So there is not one standard business credit score. So multiple agencies, as I said a little earlier, offer different business credit scores. So you have Equifax, DNB, Dun & Bradstreet, and Experian, and they all have different ways to calculate your business credit score. So let's talk about your Equifax Business Credit Report. So an Equifax Business Credit Report contains a variety of information about your business, including you have company information, credit data, public record, payment history, financial information, and what they call Equifax ID. Let me break it down for you. So when we talk about your company information, this includes your business name, phone numbers, addresses, and alternate business names, DBAs. You'll also find a standard industrial classifications, a SIC code, and owner and guarantor names. Other things you might find include sales information, number of employees, and a corporate family tree, which may include other related businesses. In terms of credit data, business loans or lines of credit from banks or credit unions are part of your credit data. So equipment leases, business credit cards, and other credit accounts are also included. It's also important to mention that Equifax is a small business financial exchange certified vendor, in other words, SBFE certified vendor, which means that it can really always obtain information from the SBFE and sell that information in reports. The SBFE is really a nonprofit trade association that aggregates payment data from small businesses across the states, okay? And you also have public records. So public records here, public record information in your Equifax Business Credit Report includes your business registration information, as well as liens, judgments, Uniform Commercial Code filings, UCC filings, and bankruptcies reported against your business. You also have your payment history, an important element here. So your payment history shows how many days it takes you to pay back suppliers and vendors. The amount of time you take to pay back your debts is also compared to averages in your industry to determine your expediency. So we're talking here, we are speaking about benchmarking here. So you also have financial information. So basically, your financial information reflects bank balances, return checks, assets, real estate properties, and inventory and sales. You also have a Equifax ID. So this is a unique identification number Equifax assigns to all businesses, including yours. You also have details here. So what is really factored into an Equifax Business Credit Report? You have a payment trends, you have credit history, you have public records, and you have what they call firmographics. So payment trends, when looking at your payment history, Equifax basically will consider any outstanding balances you have with, say, vendors or creditors, such as days past due and your business's worst delinquencies over the past 2 years. 2 years, not 5 years, not 3 years, but 2 years. And this analysis also includes non-financial transactions. So a good score is contingent on your business paying back all its debts in a timely fashion. So besides payment trend, you have a credit history. So when Equifax looks at your credit history, your business's credit history, they will look at how long your oldest financial account has been open. And the cool thing is they actually will reward seniority here. So the longer your account has been open, the better, as this reflects a stronger credit history. And other factors include credit inquiries and credit utilization. So having a lot of credit inquiries throughout your business's history could be a red flag. As far as credit utilization, Equifax looks for no more than 30% to 40% at any given time. $40,000 in use on let's say $100,000 line of credit, for instance. You also have to think about public record. So if there is negative information about your business on the public record, this will have an adverse effect on your credit score. This includes judgments against your business, credit liens, and bankruptcies. If your business has experienced any of those things, Equifax will also factor in recency to determine how severe of an impact this event will have. And you have the last part, you have a firmographics. So firmographics are the demographics of your business, such as company size, age, and industry. And Equifax will compare your business's firmographics to those of your competitors, okay? And that goes back to benchmarking. And so what they do is that they will also compare that to larger trends in your industry. So when it comes to firmographics, older and larger businesses tend to score higher. So it's all about longevity, once again, longevity and seniority. Let me talk to you about some granularity here. So when we talk about the Equifax Business Credit Report, I want to give you a breakdown of the scores. And so when we talk about the breakdown, it's important to really understand that we have to contextualize all the analysis, okay? And so this evaluation produces a set of scores. So while most credit bureaus will provide you with a single credit score between, let's say, 1 and 100, an Equifax Business Credit Report provides you with 3 different scores. So they have the payment index, the business credit risk score, and the business failure score. So this is just the Equifax way of slicing and let's just say siloing the whole analysis here, okay? While Dun & Bradstreet is giving you a more compact score, Equifax is really trying to really explain things further. But hey, listen, it is what it is. So let's dig a little deeper here. So what about the payment index score? When you think about your Equifax Business Credit Report, what is your payment index score? Your payment index score is your typical credit score. So this is a number between 1 to 100, with 1 being the worst score and 100 being the best score. So the number is based on your business's payment history. If you pay your bills on time, your score will be between 90 and 100. If you have even one bill that's between 1 and 30 days past due, your score could drop to between 80 and 89. Having bills 31 to 69 days past due will drop your score between 60 and 79, and a score between 40 and 59 reflects bills that are 61 to 90 days past due, and a score between 20 and 39 is for bills that are 91 to 120 days past due. If you have bills later than that, you can expect a score between 1 and 19, which you don't want to have anyway. So that's for the payment index score. What about the credit risk score? Let's talk about that. So Equifax Business Credit Risk scores range from 101 to 992. So with a higher score correlating to lower risks. So this score aims to help lenders answer the following questions. Will I be paid? When will I be paid? Is my customer facing financial difficulty? How much credit should I extend? So in general, a score over 556 is considered good, while a score of 0 indicates bankruptcy. So something to really think about. You also have a failure risk score. So your Equifax business failure risk score is a number between 1,000 and 1,610, with a lower score indicating a higher risk of your business ceasing operations within the next 12 months. And this score is determined using commercial demographic data, credit and payment information, as well as company legal records. So you have a large array of data here. Let me give you a few tactics here. How do you get an Equifax business credit report? So everything happens through Equifax. Okay, you don't have the business equivalent of annualcreditreport.com. Remember, if you are an individual, you can get your personal credit report from all the 3 agencies, TransUnion, Equifax, and Experian, by visiting a website called annualcreditreport.com. And you do this once a year. But this situation doesn't happen with a business credit report. So to get an Equifax business credit report, you simply visit the company's website and purchase a single report for $99.95, so $100. You can also purchase a pack of 5 credit reports for $399.95. And Equifax also offers credit monitoring services for $16.95 per month. And it's worth noting that Equifax is the most expensive of the 3 major credit bureaus, because Dun & Bradstreet charges $61.99 for a business credit report, and Experian charges $39.95. So Equifax is really kind of expensive here. But hey, listen, it is what it is. If you think that you really need your data, you will pay for it. So why would you want an Equifax business credit report in the first place? It's important to understand that it depends on the goal that you have for your business, and also especially when it comes to business funding, right? Part of the reason you want an Equifax business credit report is the same reason you would want any business credit report, right? To gain a better understanding of your business's financial health and appeal to potential lenders and investors. But an Equifax business credit report has the added benefits of providing credit risk and business failure risk scores, which you don't get with the other credit bureaus. So these scores may not be particularly helpful to a small business, but can provide valuable insights to lenders. In addition, these scores can come in handy if you are considering buying out a competitor in your industry, or let's say merging with another business. That way you have a clear idea about the risk, right? And that's what you want. You gotta have you need to know what you're getting yourself into. What are the risks? What are the challenges? What are the potential challenges? What are the potential hurdles? And you got to really know that information beforehand before you make a jump anyway. So that's very important, especially if you have to get things done the right way. Okay. Let me give you the strategy here. So what should you do if there's an error, let's say on your Equifax business credit report? So basically what happens here is that you have a lot of possibilities. When you actually get your business credit report, it's important to review it carefully for errors, because what will happen here is that even the smallest mistake can have a huge impact on your overall score. So the first thing you want to do is if you spot an error, you want to ensure that you're not responsible for it, right? So you want to provide consistent information to the credit bureau. That is, for instance, having your name spelled the same way throughout. So when you contact Equifax, Experian, or Dun& Bradstreet, we need to have consistency. That way, you can ensure that you don't cause any mistakes on your credit report. If you see that your report doesn't reflect all your credit accounts, you may need to reach out to your creditors and ask them to supply your information to the credit bureau, as some are not required to do so. Remember that for your vendors, it's a cost. It's a business cost for them to report your data to the credit bureaus. So for all mistakes, you want to contact Equifax directly via the customer support hotline or online dispute center. And you also want to contact the organization that supplied the information to Equifax in the first place. Remember that according to the law actually mandates both Equifax and the organization that supplied the information, and in this case called the data provider or the data supplier, both are obligated to provide correct information under the Fair Credit Reporting Act, so the FCRA. And Equifax aims to resolve all disputed claims within 30 days of the dispute being initiated. So what happens here is that when you initiate a dispute, Equifax will prompt you to submit a research request form via the member center of your account. And upon receiving the completed research request form, Equifax will forward a request for verification to the reporting entity. And after completion of the verification process, Equifax will notify you in writing of the results. So that's really good. You can see that everything is pretty methodical, pretty straightforward. Additionally, all the information contained in the public records and credit data section of the report may be changed as a result of a dispute. For other sections, your business may provide a statement of explanation and further documentation to be reviewed. So one thing you need to know that when you initiate a dispute, you gotta be sure to clarify, let's say, the disputed item. So you need to clearly identify the disputed item on your report. You need to provide facts and information that prove an error was made, and request deletion or correction. And Equifax also knows that if you find an error on their report, you may try to get actually your credit report from a different bureau to see if the issue persists elsewhere. So the bottom line here is that it is totally possible to use Equifax to actually grow your business, right? It's all about using your Equifax Business Credit Report, especially because it is so granular. So actually, to polish your credit worthiness, your business's credit worthiness, so that you can get a loan or a line of credit or even other kinds of business credit, so you can grow further. So Equifax offers one of the best credit reporting options on the market for small businesses. And if the score is not quite what you had hoped for, it's important for you to really start having a conversation with Equifax about your business credit score. If Equifax gives you a strong score, it opens your business up to a myriad of financial opportunities. Furthermore, if you have a strong business credit score, you probably have a good idea of what you need to do to make the most of those opportunities and continue growing your business in the first place, right? And that's what you want to have. You want to have this sort of possibility. It's important to really understand that you got to have a conversation with Equifax. Don't wait until you check your credit to see that there is a discrepancy. You got to have an ongoing conversation with Equifax to make sure that they are really reporting accurate data about your business all the time. And what you need to have also the same conversation with your vendors, especially the most important vendors, those you owe a lot of money to. And if you are in good terms with them, if you're paying them normally, you want them to report that information to the business credit bureaus, especially Equifax. So here are the closing arguments. In today's conversation, I spoke to you about Equifax Business Credit Report. I actually give you the general considerations, the details, and I give you the tactics. So the details, I spoke about the granularity, the tactics, the strategy, and now the closing arguments. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.